Ladies and gentlemen, good day and welcome to the Somany Home Innovation Limited Q3 FY22 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Conference over to Mr. Vineet Kala from Monarch Networth Capital. Thank you, and over to you, sir.
Thanks, Irene. Good afternoon, everyone. On behalf of Monarch Networth Capital, I would like to welcome you all on the Q3 FY22 earnings call of Somany Home Innovation Limited. From the management side, we have with us Mr. Rakesh Kaul, Full-time Director and CEO of SHIL, Mr. Rajesh Pajnu, CEO of the Pipes Business, Mr. Sudhanshu Pokhriyal, CEO of the Bath Business, Sandeep Sikka, the Group CFO, and Mr. Naveen Malik, the CFO of SHIL. I now hand over the call to Gavin from CDR India. Over to you, Gavin.
Thank you, Vineet, and thank you for introducing the team. Just before we start, I'd like to mention that some of the statements made in today's discussions may be forward-looking in nature. The actual results may vary as they are dependent on several external factors as well, and a statement to this effect has been included in the result presentation that has been shared with you earlier. We will start the call with opening remarks from the management, following which we will have an interactive Q&A session. I now invite Mr. Naveen Malik to open the call. Over to you, Naveen.
Thanks, Gavin. Good afternoon, ladies and gentlemen, and welcome to Somany Home Innovation Limited Q3 and 9-month FY22 earnings call. I am joined today by Mr. Rakesh Kaul, Full-time Director and CEO Somany Home Innovation Limited, Mr. Sudhanshu Pokhriyal, CEO Bath Business, Mr. Rajesh Pajnu, CEO Pipes Business, and Mr. Sandeep Sikka, Group CFO. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature. The actual outcome may vary as they are dependent on several external factors as well. The participants may make their own assessments before taking any decision. I will be taking you all through the financial performance of the company, followed by which the respective business heads will take you through their respective businesses. Before moving on, I would like to mention that for the purpose of a fair comparison, the figures discussed on the conference call for Q3 FY21 and 9-month FY21 have been adjusted to exclude the contribution from the water heater business, which was sold in a slump sale to Hintastica Private Limited, currently a 50-50 joint venture between Somany Home Innovation Limited and French multinational Groupe Atlantic. Now coming to numbers. During the quarter, we delivered a healthy growth of 26% year-on-year in the consolidated revenue, and EBITDA for the quarter was around rupees 62 crore, registering a growth of 6% year-on-year. Profit after tax for Q3 FY22 is around rupees 36 crore, representing a growth of 7% year-on-year after adjusting the earlier period tax refund of rupees 4.3 crore in the corresponding period of previous year. For 9 months FY22, consolidated revenue was recorded at rupees 1608 crore, registering a growth of 48% year-on-year. EBITDA for the period was rupees 137 crore, registering a growth of 57%. Moving on to a segmental performance. The building product division delivered a robust performance during the quarter. It recorded a revenue of rupees 496 crore, registering a growth of 32% year-on-year. EBIT for the quarter was rupees 46 crore, growing by 37% year-on-year, and EBIT margin for the quarter was 9.3% as compared to 9% for Q3 FY21. These figures include a positive contribution from the plastic pipes and fitting business. Sales for the pipe business stood at rupees 156 crore, registering a growth of 33% year-on-year. The consumer appliances business. witnessed a growth of 7% year-on-year, coming in at rupees 131 crore despite muted demand. EBIT for the segment was rupees 4 crore, registering a degrowth of 72% year-on-year. This was a result of the inflated input cost as well as demand slowdown because of the Omicron scare. The business was impacted during the quarter, but we believe that the impact on the profitability is transient in nature, and our focus to further improve the efficiency of our operations will help us drive growth in the coming quarters. The retail business revenue grew by 23% year-on-year to rupees 22 crore. EBIT stood at rupees 2 crore, having grown up by 80% year-on-year and was yet another profitable quarter for this business. As a company, we continue to register growth and maintain profitability. We hope to drive business performance backed by our strong brand Hindware, consistent and innovative product launches, and our robust retail and distribution network. With that, I would like to call Mr. Rakesh Kaul to take you all through the consumer appliances business and the retail business. Over to you, Rakesh.
Yeah, thank you, Naveen. Good afternoon, everyone. And thank you for taking the time to join on today's call. I hope you're all keeping well during this pandemic. As far as the Shill standalone performance is concerned, the consumer appliances reported a muted growth of 7% this quarter, year-on-year. This is after registering a CAGR growth of 31% over the last 4.5 years. And this muted growth was because of the higher base in Q3 FY21, which also enjoyed the benefit of huge pent-up demand post the COVID getting over the first wave. Q3 FY22, especially in the later half, saw a huge tapering in demand immediately after due to the Omicron scare, and also it adversely impacted the consumer sentiment. Besides, e-commerce, which was an instrument of growth in this business, also was under a huge downslide because of consumer reluctance to buy during the later half of Q3. But on the back of our strong brand Hindware, we were able to register a growth despite all these challenges, recording a revenue of around 131 crores. The profitability of this segment, as Naveen reported, was impacted and was with an EBIT of 4 crores owing to the inflated raw material costs and other input costs, which included very high ocean freight, which included a lot of changes in the input costs as well. This has been the trend in the industry for the past few quarters, but in Q3 FY22, the impact on EBIT was much more pronounced. We expect input costs to remain high at least for the next 1.5 quarters, post which they should stabilize. During the quarter, despite the slowdown, we launched 19 new products and remained committed to developing innovative products for our consumers, and the new launches are an attestation of the same. We have also appointed a fairly huge number of distributors, totaling up to 93 distributors across the country to capture the growing demand, and this was mainly on account of a stupendous growth of our business in fans, which grew by 88%. We have been also focusing on growing our kitchen appliances business, which is not only the biggest contributor to the consumer appliances business, but also enjoys a significant market share in the kitchen hoods hob segment. We launched 16 new exclusive kitchen galleries across the country, taking the total number of kitchen galleries to 140. This is to provide a great consumer touch point accessible to our consumers, where they can go through the entire range of Hindware kitchen appliances. During this quarter, the possibility of a third wave and the consequent lockdowns and the scare of the Omicron variant dampened the consumer sentiment further. The slowdown had already was visible post Deepavali, and hence concurrently high costs kept profitability under pressure. We are seeing a revival in trade sentiment for some of our categories and expect it to further improve with inventory offtake as the Omicron fear abates and the COVID cases in the country decrease. As far as the retail and D2C business is concerned, the revenue grew by 23% year-on-year to 22 crores. EBIT was recorded at 2 crores, which was registering an 80% growth year-on-year, and the margin stood at 8.4%, up from 5.6% in Q3 FY21. So this is a significant milestone in the sense we continue to grow profitably in this business from previous quarters as well. We launched around 200 new products during this quarter, expanding our product portfolio to cover a wide range of price points. Additionally, in line with our strategy for the business, we also added 10 new franchisee partners in the quarter, taking the total to 30. So we continue to adopt an asset-light approach to grow this retail business by focusing more on the franchisee business and the e-commerce business. And with that, I would like to conclude my remarks and hand over the call to Mr. Sudhanshu Pokhriyal. Over to you, Sudhanshu.
Thank you, Rakesh. Good afternoon, everyone, and a very warm welcome to all of you. Q3 FY22 was a healthy quarter for the building product division. We witnessed robust growth in both revenue and profitability. There has been a steady increase in demand supported by consumer undertaking home improvement projects, combining with the increasing real estate demand on the back of low interest rate government incentives and increasing sales. I'm happy to report that during the quarter, we witnessed an increase in market share for both our sanitary and faucet businesses. Our leadership in product design, brand salience, wide portfolio, and robust distribution have enabled us to deliver industry-leading performance for many quarters now. Owing to these factors, we have delivered a healthy growth in revenue and profitability. We've been investing in strengthening our retail and distribution network at a pan-India level to further penetrate the Tier 1 and Tier 2 markets and to reach out to Tier 3 and Tier 3 to Tier 5 markets. Even the institutional businesses contribute significantly to the growth seen in the quarter. We also have launched another range of product called Spyro, which is both sanitary and faucet range, which has been well received and is expected to grow further in the coming quarters. The consolidation of our brand teams has also led to positive impact on our margins, and we plan to continue this strategy going forward to reap its benefits. To conclude, I would like to reiterate that this quarter has been a positive one for the building products division, and we aspire to continue on this healthy growth journey, increasing our market share and creating products aligned to the need of the consumer. I would now like to hand over the call to Mr. Rajesh Ajnu to take you all through the plastic pipes and fittings businesses. Over to you, Rajesh.
Yeah, thank you, Sudhanshu. Once again, welcome everyone to this Q3 and YTD earnings call. Our plastic pipes and fittings business have grown by 33% year-on-year with a revenue of 156 crores for the quarter and also 55% YTD 9 months, and continues to positively contribute to the company's bottom line. In what has been a difficult environment for the space, our business has grown in revenue, volumes, and market share on the back of the wide acceptance of our brand and the quality of our products. Despite increased fluctuations in raw material prices, we have been able to grow the business. CPVC's contribution to the revenue has also increased during the quarter, signaling a favorable mix of product sales, enabling us to enjoy better realization. We constantly work with the plumbing community to create an ecosystem where both parties can help each other grow. It has proven to be an extremely effective strategy to enhance brand awareness. We continue to implement initiatives that help Trueflow create stronger bonds with this influencer community. In terms of the proposed transactions in which Truloka Limited will acquire the manufacturing assets from HSI, the projects that pertain to plastic pipes and fittings business have seen good progress. The pipes plant with expanded capacity is on track and expected to be commissioned in the first quarter of the next financial year. And also the new overhead water storage tank production facility is going to commence in a month's time in Hyderabad. We are excited to start this new chapter of our journey and believe it will be a major step in helping make Trueflow one of the leading plastic pipes and fittings brands in the country. We continue to grow at a good pace, backed by many factors, both internal and external. As the raw material prices stabilize, we are confident of delivering a faster growth rate and better profitability. I believe that concludes the opening remarks, and I would like to ask the moderator to open the floor for questions and answer session. Thank you, gentlemen.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2 to remove yourself from the queue. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question is from Dixit Doshi of Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Can you hear me?
Yes, we can hear you.
Yeah. So my question is regarding the consumer appliances business. If I see, the year-on-year, the margins have come off very sharply. So is it because of the transfer of the water heater business, or such the margins have come down? And how do you see the trajectory in the margin in consumer appliances business?
Rakesh, I would request for.
Yeah, thank you so much for this question. So first of all, let me reiterate that the margins from a comparable perspective have not come down as a gross margin percentage because of the water heater business getting transferred. It is primarily because in Somany Home Innovation Limited, we have a high margin business of kitchen appliances business. So we suffered on account of very, very high ocean freight, which went at up to 350% more than the last year, Q3. And also there was huge shortage of certain raw materials and electronic components for our IoT-based products and smart products, so which further enhanced the price. So I think the margin loss was primarily on account of the input prices, the ocean freight, the transportation, which substantially reduced the margin by almost 4.5% from the preceding quarter and almost 5.5% from the previous year's quarter. Having said that, the buoyancy from an overall perspective, we could see the competition landscape. Majority of the brands, almost 80 to 85% of the brands in this space, have suffered huge margin erosions in the last quarter. Even established brands who've been there for 3 to 4 decades as well. Having said that, we believe that the sentiments and the buoyancy for our business, we continue to remain buoyant for our business, and we see that post the end of Q4, we see demand getting revived considerably. One is on account of a seasonal category of air cooling, which we believe that if the Omicron wave settles down now, we could see a full season coming ahead of us, which was not the case for the last 2 years. So I see margins stabilizing and coming back to the Q2 level somewhere around start of Q1 22-23. I hope I was able to answer that.
Secondly, in terms of growth in consumer appliances business, so obviously when we had a lower base, we were growing at 25-30% plus. This quarter, the growth was slightly down, also because of the Omicron. But on a sustainable basis, 2-3 years down the line, what kind of growth we can expect in consumer appliances?
I think in the past calls also we have given this, benchmark that we want to be a substantial business, and in the next 2 to 3 years, we would like this business to be around anywhere between 1,000 to 1,200 crores. That's what we are looking at. So we would continue to grow. We would continue to target a growth of plus 30% in the coming years as well.
Okay. That's it from my side. I'll join back in the group.
Thank you so much.
Thank you. Our next question is from Deepak Poddar of Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So, sir, first I wanted to understand, like you had mentioned earlier as well about the price hike. So just wanted to understand what sort of price hike we have already taken and what sort of price hike would be due?
You're talking about consumer business or you're talking about the building product business?
Both.
Okay. Rakesh, if you can answer on the consumer side, I'll request.
Yeah, as far as the consumer appliances business is concerned, over the year we have taken three price hikes in kitchen appliances business. But unfortunately, in the cooling business and the seasonal business, which got impacted badly by the Delta wave, despite the high input prices, the inventory at the trade was very, very high, and the trade was not amenable to carrying any further stock at a higher price. So there our margins suffered much more because of the devastation of the the season, which was because of the COVID too. However, having said that, we have increased our kitchen appliances prices, and we are also intending to increase the seasonal products pricing very soon, so as to cover up for the loss of margin in the last quarter.
Okay. And any further price hike planned?
Yes, I think this quarter would see one price hike for sure. Quarter 4.
Okay. And can you quantify it, like, so in percentage term, how much was the price hike? A range may do, yeah?
So I think, as I told you, in all the categories we've not been able, because we are at various stages of growth in our categories. Some of our businesses are as young as 1.5, 2 years old, and some of our businesses are at the most 5 to 6 year old. So basis on the strength of our businesses, for example, in kitchen appliances, where we are very strong and we are a number 2 player in the kitchen chimney segment, we could afford a higher price increase to the tune of around 8 to 10% this year so far.
Okay, understood. And what about the building product?
Yeah, Sudhanshu?
Yeah, hi. So we took systematically, 3 price hikes in sanitaryware and 2 price hikes in faucet business. And both combined, if you see, it will be to the tune of about 20-odd% in sanitary and 23% in faucet. So 21% odd weighted average pricing has gone up during the course of the year.
Okay, 20%. And any further price hike planned, or the current price hike covers the input cost increase?
No. As of now, there is no price hike in the current quarter. I won't be able to comment on subsequent to that as of now.
Okay. So I understood on those price hike point. Now, by when do we see then our EBITDA margin, if you see, normalizing? And even I think post this acquisition, we were talking about 14 to 15% long-term margins, and now I think we are talking about 18 to 19% long-term margin, right?
Yeah. So if you see the margin, last 9 months have been very, erratic in terms of the input material. Let it be the freight cost, let it be the increase in the natural gas prices. So at every stage, we have to test the market to a price hike. So when we had given this guidance of incremental margin expansion, it was not linked to the volatility into the input prices. Right. So this is coming from, the rationality which we do, on the premium side of the business, the product mix, using the operating leverage, the cost of the leverage, bringing efficiencies into the business. So the incremental margin guidance which we gave around 9 months back was linked to these factors, not to the volatilities into the market. So market shouldn't get confused on this, because this price hikes are linked to the input price, things which are there.
Right. Yeah, that's fair point. Now, assuming the things get settled down and your input cost kind of stabilizes,
Yes.
So that 18-19% guidance maybe in 4 years down the line still holds, right?
Yeah. We have given a medium to long-term guidance, and we are walking that path. If you see, we had not only given guidance on the margin, we had also given guidance on bringing effectiveness to working capital. So, we gave a guidance that we'll try to work around bringing 20% efficiency. So we have done a fair level of work there also. And few of the numbers would be visible to you as a part of the segmental reporting which we have reported.
Okay, understood. And my final question is on gas pricing. Now the summer is also coming up, so in summer generally gas prices go down. So any kind of outlook we have on gas pricing, and how do you see it?
Very difficult to judge the gas prices. So if you see the natural gas price, it has almost gone 80-90% in last 4 months. And I think it will be very wild guess. But we internally, our guidance is that it should slightly mellow down now, given the fact that such a spurt has happened. And but it will not come back to the same levels as it was, somewhere in 23-25 rupees. So, but should stabilize in a range of 40-45 rupees. That's our internal thought. But this is based on the current market conditions and subject to how the market operates.
Okay. Stabilize at 40-45 rupees. Currently it is at what, 45 to 50 rupees?
Yeah. Because we operate in different states, in some states higher than 50 also.
Oh, okay. Fair enough. Yeah. That's it from my side. All the very best. Thank you.
Thank you. Our next question is from Sunny Gosar of NK Ventures. Please go ahead.
Yeah, thanks for taking my question. I have a couple of questions. First of all, basically, I would like to understand that typically what last few years quarterly performance has been disrupted by COVID waves and in some quarters by some pent-up demand. So if you can give some color on typically in a steady state, which quarters are seasonally the strongest and which quarters are seasonally lean, and that both across basically consumer appliances and building products.
Sure. I'll give an overall overarching answer on this. So let's talk first with the bath products. So generally, based on the historical trends, we have seen that quarter 3 and quarter 4 generally constitute 60 to 65%, not 60, around 60, 55 to 60% of the sales. And the first and the second quarter is 45 to 40% on the bath product, but that's not the seasonality. On the pipe side, quarter 2, due to the rainy season, gets slightly seasonal. On the consumer product side, like we have a steady state business which is on the kitchen part, which keeps flowing. Water heaters is a winter product, and air cooling becomes the summer product. So that's how we try to balance. So these are the seasonal products which are there into the businesses. Rakesh, if you want to add on to this, anything.
Yeah, I think you're right. So primarily, so we have the sell-in season. So from a revenue perspective, so we have a sell-in season and a sell-out season. So for air cooling, quarter 4 becomes a big sell-in season, and quarter 1 becomes a big sell-out season. And similarly for water heaters, quarter 2 and quarter 3 becomes good sell-in season. Quarter 2 becomes good sell-in season, and quarter 3 becomes a good sell-out season. As far as our new categories of fans is concerned, largely most of the quarters behave like kitchen appliances, except the quarter 3, which is a little bit muted in terms of sell-in.
Right. And considering whatever our salience is for each of these products, so will it be fair to say that in the consumer appliances side, like typically Q3 and Q4 would be the largest quarters seasonally for us in a steady state?
Yes, for Somany Home Innovation Limited, the current range around of products, you're right. Q3 and Q4 would be the largest in terms of sell-in opportunity. And Q1 will be big in terms of sell-out opportunity for the cooling business, though that will not reflect in the primary figures to that extent what the Q4 figures would report.
Sure. My second question is basically in the consumer appliances side in this quarter. So will it be fair to assume that the biggest hit on the margins is largely due to the kitchen appliances segment, and other segments have largely done well? Is that fair to assume?
I wouldn't say that's fair to assume. So though we really don't divide segment margin, but kitchen has been a larger percentage of our growth margins. Kitchen appliances, primarily the margins would have suffered on account because a good percentage of kitchen appliances still come through the imported route. So the ocean freight, which is more than 350% more than impacted the margins. But from a contribution perspective, kitchen appliances contributed to almost around 40 to 45% decrease in margins, and the balance categories to 50 to 55%.
Sure.
Out of the reduction of margins.
Sure. And is it would you say that in terms of the margins, have we seen the worst in Q3, or there could be some more impact left even in Q4? Because you said that in Q1 we should get back to Q2 margins, but what is the outlook looking like for Q4?
Well, at prima facie, so it doesn't look that, it can get worse, but it doesn't seem to be improving as of now. And besides, if you see, January was more of a demand death in terms of, closure of the shops and so many disruptions and lockdowns across the country. So The input prices certainly have not come down. Whether they will go up is a matter something which I cannot really comment upon. But at this point of the time, it looks that they might this for sure. So this is the price side, but we see demand reviving.
Sure. And I have one last question. Basically, can you comment on the debt levels as of December 21? I assume that you were at around about 75-80 crores of net debt as of September. What would that number be as of December?
The overall loans which is there is which is consolidated is 102 crores. But apart from this, we have higher investments into mutual funds, which is in Briloka. So Briloka is today debt-free, and as of 31st December had around 50 crores in surplus money, and we use bank limits as in SHIS, but the consolidated debt is 100 to 102 crores as of 31st 2021.
Okay. Thanks for the detailed answer.
Ladies and gentlemen, this is just a reminder. If anyone would like to ask a question, you're welcome to press star and then 1 on your touchtone phone. Our next question is from Nikhil Gada of Abacus AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, first, just a quick check. I guess you mentioned that this current quarter margins, there was a net of 4.5% quarter-on-quarter and 5.5% year-over-year due to higher freight cost in consumer appliances. Did I hear it correctly?
Yeah, freight cost was one of the components of the increase of the decrease in margins.
Understood. Because where I was coming from is that when I look at our standalone numbers, the gross margin impact is maybe close to 120 odd bips. And as you rightly in other expenses, the other expense component is quite high. So what you're saying is making sense. But just question on that front, that the price hikes that you mentioned in kitchen appliances especially, which you mentioned to the tune of 8 to 10%, can you split it up in terms of when exactly date-wise we had taken this price hike?
So we took one price hike somewhere in August. The second price hike we could only take in on 5th of December actually. So if you see for the month of December, largely some of our margins came back, but the impact of October and November was very high. Because October we are in the peak of season and majority of our products were coming in higher landed costs. But it was Deepavali and so many, so it was, none of the competition dared to actually increase the price during that period. And so the impact of Deepavali carried it on November. So December was the second price hike which we did for the year. And by that time the demand there, the Omicron wave also came in. So the actual increase in margin we could have happened in December on account of full demand did not happen. The e-commerce chains also collapsed. The e-commerce in pursuance of the possible new draft rules, rationalize their inventory, cut down on stocks. So we did a much higher sellout on e-commerce platforms to the tune of 124%, but they bought in lesser stock. So the primary revenue suffered on e-commerce as well. I think possibly I stick my neck out and to say that e-commerce, for the first time possibly degrew in India, at least in the consumer appliances category for the Q3. So again, coming back to your question, the second price increase happened in first week of December, but the impact of that could not be felt because it was a very challenging month in terms of numbers, revenues.
Understood. So in that case, at least sequentially we can see 4Q to report a better EBIT margin numbers than 3Q. But I believe kitchen appliances generally tend to have a very higher base in let's say 2Q and 3Q, and 4Q. I'm just guessing over here. 4Q the demand is a bit lower compared to 2Q, 3Q. Am I correct in that aspect?
Yeah, absolutely. You're right. So while Q4 you might see kitchen appliances margins increasing, but the mix of products would be such that cooling would be higher than kitchen, could be higher or equal to kitchen appliances, unlike the previous quarter. So overall, the margins will not increase from Q3, because the contribution mix of kitchen appliances will actually decrease in Q4. But yes, from a category perspective, we'll see an increase in margins of kitchen appliances.
Understood, sir. And just lastly, on consumer appliances, then I can ask on building products. I was of the understanding that a large part of our procurement we had switched to local vendors during, when COVID-1 happened. And I think you once again mentioned that we still do a lot of import procurement. So could you give a number as to in the total mix of our consumer business, out of how much would still be imported?
So let's say if we talk sanitary ware, almost 70% of sanitary ware is coming from FSI, and you can assume 15, balance 30%, around 10 to 15% coming from imports, and balance getting sourced domestically. On the faucet side, it's primarily the domestic only, because we don't import much other than the a premium brand Q, for which some faucets are there. So you can assume 5%. 5 to 10% as imported on the faucet.
So at a combined level, we would be less than 10% of our total revenue, of our total cost base would be procured from outside, But 16% on sanitary ware and less than 5% on faucets.
Yes, I understand that. My question was more from that consumer appliances business where,
Okay. Sorry. I thought you asked question on building products.
No, sir. So I just speak.
I'll request Rakesh to maybe address this question, please.
Yeah, sorry, was not able to comprehend your question completely. Can you just please repeat it for me?
Yeah, sir. So, post COVID-1, I believe a lot of our, procurement was done from a local vendor base. Because of the said issues that the availability was always a problem, and you mentioned right now in your commentary that still we are doing import procurement, which still remains a bit high, and that is why the freight cost has impacted us. So just wanted to understand, as in how much of our procurement in consumer appliances still happens from imports.
So a good question actually. So I would like to divide this into categories and businesses because we'll get a great reflection how we have moved supply chain from overseas to India. So for example, our retail business, which is a contributing factor of around 13% to 14% to the overall SHL standalone revenues, we have moved the supply chain from last year, which was at 85% imports to 15% domestic. We have flipped it around, and now we are at 86% domestic and 14% imports. So that's virtually changed completely in terms of furniture and retail business. As far as the other businesses are concerned, cooling products and heating, we were largely contract manufactured in India. So kitchen appliances was the only business which had a larger percentage of around 80 to 85% was imported. So we also, did an exclusive contract with one of our contract manufacturers somewhere in the month of middle of Q2, and he's built an exclusive manufacturing facility for him there only, given the kind of quantities and given the kind of share which we have in the category of kitchen hoods and chimneys. So the factory took a little bit time to stabilize, and it was stabilized only by the end of December. And you will see a lot of percentage, I believe that the supply chain for kitchen appliances in next 2 years could almost come down to as low as 15 to 20% from overseas, and balance 80 to 85% will be procured from this exclusive contract manufacturing site, and also some of the other contract manufacturing sites where we are securing material, where we have started securing material.
Understood, sir. Understood. And just on the plastic pipes division, in CPVC, we have seen the market has seen now inflation in CPVC resin prices as well, and a lot of the vendors have increased prices. So just wanted to understand, have we seen an impact on that front, and how are we able to pass this on, and was there any inventory impact as well?
Rajesh, if you can take this, please. Mr. Rajesh, will you are there?
Yeah, I'm here. Am I audible?
Yeah, you are audible.
Okay. So, See, this business PVC and CPVC is basically everything is being passed to the consumer, whether it's an upward price trend or a downward price trend. So always, maybe it may take some time, but the prices are being translated to the end user. But what has happened is in the past 2 quarters, the CPVC availability has been an issue worldwide because of so many shutdowns and so many other things. So there has been an increase in the price to the extent of 35% in CPVC pricing. And this has been translated to the consumer. In fact, we have been doing very well. We are the fastest growing PVC and CPVC manufacturing company in the country. And we have grown by almost around 60% YTD 9 months as far as the revenues are concerned. And as far as the volumes are concerned, we are the largest percentage-wise grown players. We have grown by 53% in volume.
Understood, sir. And did we have any negative inventory impact in this quarter?
No, not really, because CPVC has been, we have not been able to get the CPVC properly. But of course, the other people have grown in as far as volume is concerned. But they are very small, so there has not been an inventory impact.
Understood, sir. Understood. Thank you for answering all my questions, sir. I'll come back in the queue.
Our next question is a follow-up question from Deepak Poddar of Sapphire Capital. Please go ahead.
Thank you, sir. Sir, I just want to understand both on the consumer appliances as well as on the building products. So how do you see your volume growth overall in next year, FY23? Some flavor, yeah.
So generally we, don't give guidance on, very near future. So we have came to long-term guidance. I think what we can reinstate here is that we are walking that path, and maybe 1 or 2 quarters disruption may come to what has come in consumer, but our strategy, for the incremental growth is there, and broadly that guidance still holds. So we are not walking back on that guidance, and that is all based on the current market condition as we are talking. So generally we don't give next 3 to 4 quarters guidance as such.
No, a CAGR over next 2-3 years, that will also kind of will help.
So if you recall, we had given that this guidance was given in May. That in next 4 years we see pipe business, growing around 1,000 crore, consumer business ranging around 1,200 crores, and we also given guidance that our bath product, which is sanitary ware faucet, it will outbid the market by at least minimum 1.25 times. So I think if you see the numbers, we are there, as on it.
Okay, understood. Okay, yep. Thank you very much.
Thank you.
Thank you. Our next question is from Puneet Khanna of BOB Investment. Please go ahead.
Yeah, hi sir. Congratulations for the great numbers. I just want to know a couple of data points. One is what is the breakup of faucets and sanitary of the building product sales. Then the second is what are the region-wise sales into tier 1, tier 2 market, and the B2B and B2C sales.
BPD and sorry, I couldn't get the last one.
I want to know the retail and project channel sales.
Okay, the projection listing. So I think if you see quarter 3, the faucets to sanitary ware, so faucet is constituting between 30 to 35% contribution to the sales. And what was the other one? Sanitary ware and other products are this thing, and the overall institutional, we do almost 70% retail business and 30% going to the institutional business.
Okay. And sir, I missed the section on the pipes. What are the pipes number?
So pipes, we did the sale of, during the quarter, we did a sale of 155 crores. 156 crores as compared to last year of 117 crores. So overall 32% growth. And for the 9 months, we have done 400 crores as compared to last year of 249 crores, representing 60% growth.
Okay. Thank you so much.
Our next question is from Shirag S. of Ratnapriya Caps. Please go ahead.
Hi, sir. Can you just repeat the pipes question, the pipes numbers that you just shared? So the last year's the same 9 months number, what would that be for pipes?
9 months number is 249 crores.
249 crores. Got it. Okay. Thank you so much. Thank you for taking my question. Also, I just also wanted to disaggregate the pipes EBIT versus the sanitary ware EBIT. I think last couple of quarters you have given a guidance of 6.5 to 9% for the pipes. Does that still remain similar, or has there been a change in that?
So, if you see, Briloka still buys almost 95-96% of products from HSIL. So, the manufacturing margins and other things is still they are part of that business. But if you see on an overall basis, we had around 8% EBIT during the quarter on the pipe side. And if you see 9 months figure, it's around 7.5%. But you have to see this from a perspective of numerator denominator also, because since there is a substantial price increase which is passed on, so there is a growth in the absolute margin, but the numbers may look percentages may.
Understood. So if I just take 8% of the price this quarter, then sanitary ware probably disaggregates out to be around 10% EBIT. Is that broadly in the range?
So sanitary ware and other businesses will be around 12.5%.
12.5% EBIT for sanitary ware and 8% EBIT for pipes for this quarter.
Yeah.
But the building product division reported 9.3 overall.
Sorry?
The building product division overall reported 9.3. Is that correct?
Yes. You have to use that multiplication weight along with it.
Got it. So 12% EBIT for sanitary ware, and I would say around 8% for faucets. Also for pipes. Is that right?
For the pipes. And the average would be the number you are talking about.
Okay. Thank you so much.
You have to use weighted average here, not simple average. Huh?
Right, sir. Thank you.
Thank you. Our next question is from Vinit Kala of Monarch Network Capital. Please go ahead, sir.
Thank you. Sir, currently in our consumer division, we have a quarterly run rate of around 130 odd crores, so translating to an annual run rate of about 520 odd crores. So given the long-term target we have on this segment, do we intend to add more categories in the future, or we expect the current set of products to drive the growth, sir? If you could throw some light from a medium to long-term basis.
Rakesh, if you can take this, please.
Yeah, sure. Thanks. So yes, if you would see in the past 5 years, we've been in this 5 to 6 years, we've been in this business. What we are trying to do is, the whole idea is to be among the top 3 or top 5 brands in each of the category where we get into within a span of 5 to 7 years. So as a part of progression of this business to grow into a much sustainable and a bigger business, we do intend to be a multi-product organization, so to say. But for that, we are very clear that any category where we are going to enter into is not just because we have created a distribution structure for ourselves or the other categories and we just want to superimpose the new product onto that. We want to enter into any category when we have a clear consumer proposition in terms of differentiation of product vis-a-vis the competition. So we take that route. We do intensive consumer research from time to time. And as such, we find that the brand Hinware has a huge affinity on the extension part, and the consumers would love to have us extended to the other categories. From time to time, we do take a call, and even as we are talking, we are taking a very close look at a couple of categories, primarily in the kitchen space, because we believe that we can dominate that space in the next 3 to 4 years. And so we're taking a closer look at some of the new categories in kitchen appliances. But right now, it won't be appropriate for me to talk about those. I hope I answered your question.
Fair enough, sir. Yes, it does. So also, on the water heater segment, what is the status of the capacity expansion in our JV? And if you could, articulate the capex plans there, how much have you already spent? How much further do we intend to spend?
Sandeep, you want me to take this?
Yeah, please.
Yeah, so from a water heater plant, I think the plant is progressing to its completion and should be commissioned by June 22 and should start full production somewhere in October 22. As I've already told you, the phase 1 will look at producing some 300,000 water heaters, and phase 2 will take it to 600,000 water heaters. The total capex outlay for the project is 175 crores as of now, and we have already issued POs worth around 66 to 67 crores to all the partners so far. So the project is on its way to its completion, and we believe that the whole idea is to have India's first green water heater plant, and so the state of the water heater plant will be a great one to cater to the latest consumer needs, and could become an avenue for doing exports to the SAARC countries as well in future. So we're online for that.
Thank you, sir. That's it from my side.
Thank you.
Thank you. Our next question is from Arpit Maheshwari as an individual investor. Please go ahead.
Sir, my question is on the retail business, although it is very small part of your business. But firstly, how this retail segment is going in the next 5 to 10 years? And secondly, you have launched 200 products in the retail category. So which category are the products are they? And what will be the margins in these products?
Yeah, thanks for that question. So while retail, we did a lot of consolidation of this business, because if you remember earlier, it was part of the erstwhile HSI Limited, where it was essentially retail, and we had our own stores, so to say, company-owned, company-operated, company-managed. So just after the COVID, we did a reorganization and tried to create a very asset-light business out of it, because the brand which we build in that category is called Evoke. It has a fair resonance amongst the consumers across the country towards the higher end, because one of the product propositions which we have is of a solid wood furniture, which is very distinct to our brand and is well known across the country. So we made it an asset-light business driven on 2-3 pillars. One of the pillars is basically to drive brand product, which remain 2 of our biggest strengths. And we have extended this product and brand into the franchise outlets. So, in the span of, you can see we have a 129% growth in the franchisee business in Q3 over the last quarter. So, which has been significant. We have moved the franchisees up to 30 numbers. We hardly had any before around, when we reorganized our business. It's become an asset-light business with very few manpower costs. The focus is on product development. The focus is on retail, because we drive this business now through franchisee and also the e-tail, which is our own D2C e-commerce website called evoke.in, which almost gets traffic of around 800,000 customers per month, and all you can translate into almost 10 million a year. As far as the launching of the product is concerned, we want to be a very significant player in the furniture category. So majority of the launches are in the furniture categories around recliners, around living, around dining as such. I hope I was able to answer your question. From a perspective of growth, I think we have grown 23% year on year. So we were trying to consolidate this business and make it asset light so that it can grow profitably, which we have been able to achieve profitable quarters except the COVID quarter for the last 5 quarters. And we believe that the further scale up of this business will be done profitably as well.
And sir, this, as you have said that you have to focus on the franchisee model. So all this will be the contract manufacturing, or you can do some part of the self-manufacturing also in the furniture segment?
So as of now, we are completely into contract manufacturing, but I must add out here, since we have some of the exclusive products, so some of our manufacturers are very captive consumer base as such. So captive contract manufacturing. So they exclusively manufacture for us, like the solid wood products which I talked to you about. Having said so, as we are scaling up our business, while we will continue to be asset light and continue to focus on contract manufacturing and continue to focus on product development, continue to focus on building technology even in this category, I think that will remain the guidance for at least next 2 years.
And so secondly, what will be the future of your Evoke showrooms? Does it cater only the furniture products, or it will cater all your retail portfolio into it?
As of now, Evoke is a brand which we use for the furniture, home furnishings category, and we believe that it has created a certain resonance amongst the consumers in this category. We will continue to build this brand in this category, and we believe that furniture online and offline and hyper-local furniture will become a significant part of the overall furniture industry. Our estimation is that in the next 3 years, hyper-local omni-channel will contribute to almost 40 to 50% of the business, the industry. And we at Evoke are very firmly geared up. Let me tell you that we have started our first hyper-local operation in Bangalore as of a couple of days back, where the consumers can actually go and buy on evoke.in, and the delivery will happen through the Bangalore store. So this gives the consumer the chance of feeling the product at the Bangalore store, ordering it online. So a complete omni-channel feeling whereby which the delivery will happen at a faster scale. We intend to integrate all our franchisee partners across the country through this omni-channel loop and build the business to a significant scale. And in fact, we are the first furniture marketeers to have initiated this hyper-local engine as such.
Thank you so much, sir. That's it from my side.
Thank you so much.
Thank you. Our last question is from Aditi Kaspeka as an individual investor. Please go ahead.
Thank you for giving the opportunity to ask the questions. I've got 2 questions. My first question is on the consumer business, excluding the water heater business. You've given us the revenue for Q3 in the footnote. Can you also give the EBIT number excluding water heater?
That, segment-wise, we have never been not disclosed as such, so we'd like to avoid this answer to be very sure.
Okay. Okay, then my second question is on the, so just before I go to the second question, so basically your segmental consumer business EBIT that you've given, that is now completely excluding the water heater business, right?
Yes. So water heater is now, since it is a 50-50 JV, the numbers of water heaters are only consolidated PAT level. So if you see the results, so we have given that our share of 50%, so profit gets consolidated at the bottom line as per the accounting standards.
Got it. Got it. So effectively, this 3.4% EBIT margin is the one which is impacted because of all the reasons that you mentioned, including your cost pressures and so on.
Yes, yes.
Understood. Okay. And my second question is on your sanitary ware part of the business. What we've increasingly seen is, of course, there is a good amount of traction that's coming from our, from the real estate cycle turning up and so on. But there are 2 parts to my question. First is that, along with this increasing demand, there is also lots of new players who are planning to enter in this space. For example, I think Astral announced recently that they would want to get into the sanitary ware space. So one would like to understand what's your take on the competitive landscape as larger players from other building materials category sort of come into this space. That's first part of the question. And I think the second part of the question is, what is our capacity utilization currently? Because from the last call that you did sometime mid-January, where we announced that we'll be acquiring HSIL's plants, what I remember is that we were pretty much operating at 100% capacity. Then in that case, where is the incremental growth going to come from? Are we planning to increase our vendor base, etc.? Because generally, the way I understand sanitary ware as a segment, it's very hard to scale up vendors very quickly if you have to scale up sales. So how do we plan to sort of balance between capacity utilization currently and how we will be sort of, growing in that particular segment?
Yeah. So let me try to answer the second question first. Our sanitary ware utilization was to the tune of 85 to 90% in Q3, and faucet was to the tune of about 65%. Yeah. So you're absolutely right. There is, as the demand is increasing, we are working towards increasing our vendor base. we are definitely looking at strategic partnerships in sanitary ware segment. And of course, there is import which is done from China as well, which we discussed, which is to the tune of about 15% within the sanitary ware category itself. So we of course have an opportunity to increase import in case in case we require to take care of the demand situation. However, yes, we are looking at increasing our domestic vendor base for sanitary ware. While for faucet, we believe we are adequately covered in terms of share capacity utilization.
So if I can just add one thing there, is it easy to do that? Like, is it that easy to increase the vendor base? Because from the way I understand it, that vendor base, while there is a vendor base, people who can really meet up to the quality standards aren't that many, right?
So, I mean, it is kind of linked to your first question as well. So both sanitary ware and faucet businesses are extremely fragmented if you see the overall nature of the business. So you have these categories where about 50 to 60%, at an overall level which is organized, and nearly 40 to 50% of the market is in the unorganized sector. And so there are many, I would say, unorganized sector players which are bordering on, in the area of getting into the organized sector business. So there is a lot of opportunity if you work with the vendor to develop them into a strategic vendor who can then, completely convert into maybe an OEM at times, or give a large part of their manufacturing, to an organized player. So of course, your own techno-commercial team or quality team has to work with the vendor over a period of time to develop into this. I can assure you that we have successfully done this with many vendors in the last 1 to 2 years, and we believe that it is doable. Very rightly said by you that it is not an easy task, but yes, it's a requirement of requirement of the business which then has to be addressed. So we believe that it is doable. We've been doing it. Now, coming back to your first question, yes, we have heard the announcement of 2 major players who are not in this category. One, of course, Astral, and there are others as well who are trying to enter into the category right now. But like I said, we believe that these categories are extremely fragmented. We have multiple players, domestic as well as international. In the last 7 to 8 years, we've seen emergence of many international players who have tried to enter the category and, of course, taken some bit of market in the last 8 to 10 years. So yes, there would be intensity of competition in the category would increase, but the sheer opportunity in the category, because only 50 to 60% of the total business in both faucets and sanitary ware is actually in the organized sector. There's a huge opportunity which exists because unorganized market is actually diminishing, and that entire conversion into an organized sector will, unleash a huge demand. So there is room for all the players. That's what we believe, and with increased urbanization, increased incomes within the Indian consumer, and of course the tendency of people staying at home, the culture of work from home increasing, the increasing spending on Indian homes. We believe it's not just volume, but also there will be an upgradation which consumers are doing in their homes, especially in their bathrooms. So we don't see any problem in terms of demand. So at an overall level, yeah, I believe that entry of more players is only going to increase demand and increase the growth in the category.
Understood. And do we really believe that, having our own manufacturing is an advantage here, or do we think that, because you're also effectively increasingly going to rely on outsourced vendors, so the question is then effectively, what is the moat for us against this increasing competition? Or do we think that it's not really needed given that the pie itself is expanding?
See, we have to divide the products into products which are, I would say, basic products, and products which are, I would say, a little bit more require more value addition, more premium products. So how we look at this is that as the capacity utilizations keep on increasing and we have to rely more on outside vendors, we first try to manufacture more advanced level products or more value added products within our own manufacturing and take the more basic products from outside vendors. So it's not just a simple thing that capacity is added, so you give the same product outside. So it's a bit of a mix mapping which is done, and then with that we are able to manage our capacities in a much better way. So we believe it's